steady. So it won't be correct at this point of time to say that key growth is impinging on the interest rates are impinging on growth. I think economic activity is well sustained.
Thank you so very much, sir. With this, we come to the close of this press conference. I thank the top management of the Reserve Bank for taking the questions. I would request the media friends to take the door at the back on that side and to come outside. Thank you, everybody, and have a pleasant day.
Thank you very much. Is it switched off? please come. Come. Use. Yeah, I think where are the photographers? They have taken? Already done?
They
So,
already
but I
taken,
was
sir.
looking down. It's okay. Thank you.
Sir, so we may start, sir.
Are there less number of people today? Or is the
24, sir, same number.
Achha, but maybe it's a bigger hall, that's why it looks different. No, maybe in future if we are doing it here, we could consider that. But please go ahead.
Sir, thank you, sir. So, hello and good afternoon. Welcome to this post-monetary policy press conference in this new setting. Friends, we have with us Governor Reserve Bank of India, Shri Shaktikanta Das, Deputy Governors, Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Executive Director Shri Dr. Rajiv Ranjan and other colleagues from Reserve Bank. To begin with, I would request Governor Sir to make his opening remarks. After that, we will have the question and answer session. Sir, please.
Thank you, Puneet, and good morning and welcome to all of you. As I already said, season's greetings to each one of you. These are main highlights in my monetary policy statement. I am not going to say anything new, drawn from the MPC. So I would like to make about totally 9 points, and I'll be quick. First, India's growth story remains intact. Second, inflation is on a declining path, although we still have a distance to cover. There are significant risks to the inflation outlook, and these risks cannot be underestimated. We need to remain vigilant. Number 3, the balance between inflation and growth is well poised. Number 4, the external sector remains stable and reflects the strength of the Indian economy. 5, forex reserves are scaling new peaks. 6, the financial sector remains sound and resilient. 7, the Reserve Bank will continue to be nimble and flexible in liquidity management operations. 8, today's monetary policy action gives greater flexibility and optionality to the MPC to act in sync with the evolving conditions and the outlook. I'd like to repeat this. Today's monetary policy action gives greater flexibility and optionality to the MPC to act in sync with the evolving conditions and the outlook. 9, we are acutely aware that there is no room for complacency, especially amidst the rapidly evolving global conditions which encompass geopolitics, financial markets, and commodity prices. Thank you.
Thank you, sir. Before we begin, I will request our media friends present here to please wait for your turn. You may see my colleagues on both sides of the aisle with mics in their hand. So, as I call out your name, they will hand over the mic to you. In the interest of time, humble request, please restrict to one question per person. And if time permits, we may consider some other questions. Sir, as mentioned, sir, there are 24 participants from media today. And with your kind permission, I'll call out the names. So I'll start with Ms. Lata Venkatesh from CNBC.
Lata Venkatesh from CNBC. Thank you very much for the opportunity. Thank you, Governor. Even if you cut, do you think, as and when you cut, do you think the fact that deposit rates are, acutely being fought for and are high, do you think it will get percolated at all, and therefore, or transmitted at all? And therefore, what is your assessment of when deposit rates may peak off? Have they peaked off?
You see, the interest rates or the policy repo rate, the decision of the MPC will be determined by the growth inflation dynamics. And we have been saying that repeatedly. Depending on the overall inflation outlook and the growth outlook, as mandated under the monetary policy, the interest rates the MPC will decide with regard to the policy repo rate. Now, the lending rates, the deposit rates, and other money market rates naturally will move in tandem or in response to the interest, to the policy repo rate decided by the MPC. MPC, of course, takes into account multiple factors. Financial stability aspects and other aspects are taken into account. While primacy is given to inflation outlook and growth, MPC does take into account several other factors. But money market rates, including deposit rates or credit rates, they respond to the policy. And all factors are kept in mind by the MPC before taking decisions. No, I can't say whether interest rates or the deposit rates, the credit rates or the deposit rates are peaked. It's for the lenders, the banks and NBFCs to decide. These are commercial decisions in response to the overall economic conditions.
Thank you, sir. We'll have Mr. Manojit Saha from Business Standard.
Good afternoon, sir. Now you have changed the stance to neutral, while you have said that the moderation in headline inflation is expected to reverse in September and going to stay elevated. So the elephant has not really come back. He is still around. He's still in the forest. So why the change in stance to neutral when inflation is expected to stay elevated?
I think you missed the shift from elephant to the horse. The horse, with lot of effort, the horse has been brought into the stable. We cannot, we have to be very careful before opening the gate of the stable, because there is every chance that the inflation horse will simply bolt again. We have to hold it in tight leash and have greater confidence and alignment of the inflation with the target. But specifically, what was your question?
Why the change in stance at a point when inflation is expected to stay elevated?
No, you see the near-term outlook, if you see the statement, if you read the statement carefully, what we have said in the statement is that September it is going to be high. The data will be released on Monday. October also it is expected to remain high, maybe around 5% or so. And mainly on base effect factors as well as uptick in certain components of food inflation. So in the near term the inflation is remaining high, but thereafter there is moderation going into the third quarter. And also we have given the number for the for the third, fourth and also for the first quarter of next year. So we have now greater confidence that inflation is moderating, but we are acutely aware that there are significant risks. I have made a reference to the data released just about a week ago by the FAO and the World Bank with regard to the commodity prices, including food also. We have to be very careful. So therefore, we have changed the stance at the moment because we see that growth and inflation, they are well poised. The balance is well poised. So the MPC considered it appropriate. The timing is appropriate to shift the stance to neutral.
So it's a pivot.
No, that is for you to assess whether it's a pivot. And neutral stance, as I said in the statement, it gives us optionality and flexibility to take decisions.
Thank you, sir. We'll have Mr. Anup Roy from Bloomberg.
Thank you, sir. Governor, you changed the stance and you gave a very strong statement that inflation, you are seeing some durable signs of inflation moderating towards the target. Given that you prefer clear communication and transparency, is that a very strong signal for a rate cut or pivot in December policy or even before that out of policy?
I think I'll request Deputy Governor Michael Patra to take that question.
So you should just assess the stance by itself, independently. So we will, as Governor mentioned, we will like to see off the near-term hump in inflation, which we all our projections suggest is going to happen. We want to see it off carefully before even considering the next move. So our whole attention is now focused on this near-term hump.
Thank you, sirs. Next, we'll have Ms. Swati Bhatt from Reuters.
Thank you so much, sir. So I just wanted to understand, India is now included in all the three emerging
Just
markets.
keep it a little closer.
Okay, is this better?
Yeah.
Governor, I just wanted to understand, so now India has been included in the FTSE Russell index as well. We already were included in the JP Morgan and Bloomberg index. To what level are we comfortable in terms of these foreigners owning government bonds? Is there a comfort level that the RBI has? If you can just briefly explain that. Thank you.
I think you can reply.
So the current holding of government bonds by foreigners is just about 3%. So even the question of what is a sustainable level doesn't rise. Even under the various routes, it's very, very low. For instance, under the FAR is just about 5.5%. So we will wait for these numbers to get to a decent level before we take a view.
Thank you, sirs. Next, we'll have Mr. Ashish Akashe from PTI.
So why have you retained the growth target at 7.2%? And what you are estimating that the second half there would be an acceleration in growth. Why are you expecting that to happen?
So I think I have explained it in my statement. I mean, the drivers of growth, the critical drivers of growth, that is consumption and investment, they continue to be quite stable. Private consumption, we saw in the first quarter data, was far better. And investment also, the numbers are looking good, and private investment is showing signs of pickup. In fact, going by the investment intentions of the corporates, given their deleveraged balance sheets, the government capex, going by all signs, I think private capex as well as the government capital expenditure is also doing well, and the services, services sector is also continuing to do well. And further, agriculture is going to provide a big boost this time, not only on the supply side, but also to consumption demand in the rural sector. The monsoon southwest has been very good. Expectations of a good, the expectations of a good Rabi output are also fairly strong, thanks to high reservoir levels and the moisture conditions of the soil. So rural demand is expected to maintain its momentum. Urban demand remains steady and will get support from buoyant services sector. So if you put all these things together, I think it gives us, the number that we get is 7.2%. And as I have already articulated, the first quarter numbers should not be, which came at 6.7%. It was primarily due to lower expenditure by both central and state governments. Maybe because of it coincided with the election season. In fact, but we now get a sense that both state and central government expenditures will meet their budget figures, will meet their budget estimates. An important aspect also, which has been perhaps missed out, but which was highlighted in the State of Economy Bulletin article of which was released in September, in the last month's bulletin article. Now, if you The first quarter, the subsidy payout was very high by the state governments in particular, and also to some extent by the central government. So GDP is basically GVA plus subsidies, plus indirect taxes minus subsidies. That is plus indirect taxes minus subsidies. Subsidies were very high. In fact, if you take out the effect of the subsidies, the GDP growth would have been quite above 7%. I do have the number, but I don't want that to be a headline. The actual GDP growth would have been upwards of 7%. But that is a statistical aspect. We don't go by statistical factors. We go by real economic activity at the ground level. And I have just explained why we are sticking to 7.2%. We just have the first quarter data. Second quarter data will come only in the end November. Second half of the year is just beginning. And our sense is that the growth is maintaining its momentum. So that's why we are sticking to 7.2%.
Thank you, sir. I would now ask Ms. Sangeeta Mehta from Economic Times.
Thank you, Governor. So, the feedback that we get in our conversations speaking with NBFCs is that the credit to GDP ratio in India is still very low. So, in that context, the observation that RBI has made that there is a push effect rather than the actual growth. How do you arrive at this? I mean, is it because that there is a huge, substantial rise in NPA? Or is it that there are some other findings that RBI has?
You see, the push effect is confined to certain NBFCs. I am not generalizing for the whole NBFC sector. I said it also very clearly that the overall NBFC sector is doing, is maintaining good, remains stable and has good health. But more specifically, I would request DG Swaminathan to reply to that question.
Yeah, thank you, sir. So as Governor said, this particular messaging was for a set of players on the one hand, on the other hand, to certain select segments in which we see an outlier growth. And these segments were called out earlier as well in our last year's prudential action. And the commentary that you would see from the June data as well as July-August numbers, September numbers are still awaited, is that there are certain elevated slippages and little higher credit cost being seen in select segments. So the messaging is targeted towards such of those NBFCs which are pursuing a high risk, high growth strategy, and also to certain segments which are likely to get into stress in our estimate. So it's not a generalized message, so it has to be seen in that context.
No, you have to wait. You have to wait for that.
Again, you have to read the governor's statement. The last line very clearly says we are watching the incoming information and then take measures as may be appropriate.
These are certain segments within NBFCs?
It's again contained in the statement itself. The three segments have been already mentioned in the statement.
Yeah. Thank you, sirs. I'd request to please speak in the mic, because here, if you don't speak in the mic, people won't get it outside. Next is Ms. Hamsini Karthak from Money Control.
Thank you, Governor.
Mic closer. Yeah.
Thank you, Governor. My question is actually a continuation on the NBFC side, more specifically to microfinance loans. Microfinance as a pocket is getting considered as a 7 to 9% credit loss kind of a sector. And most of the players in the industry believe that that can be priced in. The risk can be priced into the interest rates as well, which is having somewhere a counterproductive effect on the rate of interest. Partly you called it out today as well. To counter that, is there something that you which is in the works that you would be looking at? Because and how much do you believe in the current market that pricing the risk is quite possible for you all? If I can add on to the question, the microfinance industry has also, whether banks and NBFCs, they put forth for some revisions to the norms that came out a couple of years back. Is that under consideration? Would you be open to amending some of the norms there?
I think I would request DG Rajeshwar Rao to take that question.
No, I think there is no real contradiction in the issue which we are highlighting. The lenders are expected to price the true risk of exposures and interest rates cannot be disproportionate to the risks. The higher credit losses which you are referring to possibly reflects poorer underwriting standards, and that's exactly the message we have been giving, that the underwriting standards have to be strengthened so that the risk is properly priced. If that happens, then there is no real contradiction and the borrowers will get the rates which are more appropriate. As regards the feedback on the MFI guidelines, we are getting feedback. We will review at an appropriate time and see if any revision is warranted at that juncture.
थैंक यू सर. अब मैं जी बिजनेस से श्री ब्रजेश कुमार को आमंत्रित करूंगा अपना प्रश्न पूछने के लिए.
थैंक यू सर. सर, आपने NBFCs के बारे में बात की कि ग्रोथ एट एनी कॉस्ट, लेकिन हाल में कुछ ऐसे इंसिडेंट्स हुए हैं जहां पे बैंक स्टाफर्स को सुसाइड करना पड़ा. एटलीस्ट दे क्लेम कि उन्होंने सुसाइड किया इस वजह से, क्योंकि उन्हें बहुत सारे टारगेट दिए जा रहे थे जो मीटअप नहीं कर पा रहे थे. तो आपने NBFC पर तो बात कही, लेकिन बैंक वाले पार्ट पर भी क्या आपको ऐसे इनपुट्स हैं या आप कुछ सोचेंगे इस बारे में?
देखिए, मैंने भी देखा न्यूज़पेपर में जो इंसिडेंट, एक दो इंसिडेंट्स जो है उसके बारे में हम लोगों ने भी न्यूज़पेपर में देखा है. और हमारा सुपरविज़न जो है वो बहुत इफ़ेक्टिवली और बहुत डीप सुपरविज़न वी आर डूइंग एंड वी आर एंगेज्ड विद द बैंक. 2 या 3 इंसिडेंट के ऊपर हम बिल्कुल जनरलाइज करने के लिए सिस्टम के लिए जनरलाइज करना ठीक नहीं होगा. जो 1-2 इंसिडेंट हुआ है उसमें क्या फैक्ट्स थे वो इन्वेस्टिगेटिव एजेंसीज जो है वो उसका जो है वो इन्वेस्टिगेट कर रहे हैं, वो नतीजा उसमें निकलेगा. लेकिन 2 या 3 केसेस में आप जनरलाइज नहीं करना चाहिए. और उसके साथ साथ मैं ये भी कहना चाहता हूँ कि हम बिल्कुल जो फेयर प्रैक्टिसेस कोड है, रिज़र्व बैंक का जो फेयर प्रैक्टिसेस कोड है, जिसको कि ना केवल NBFC बट बैंक्स दोनों को फॉलो करना चाहिए, वो किस हद तक फॉलो कर रहे हैं, इंडिविजुअल एंटिटीज़ या नहीं कर रहे हैं, उसको हम रेगुलरली मॉनिटर करते हैं. और जहाँ जहाँ हमको कुछ कमियाँ दिखता है, हम वो जो रेगुलेटेड एंटिटी है, बैंक हो या NBFC हो, उनके साथ टेकअप करते हैं. और पास्ट में अगर देखेंगे हमने कई सारे एक्शन भी लिया हुआ है, इंक्लूडिंग मॉनेटरी पेनल्टी लगाया है और उसके साथ साथ कई केसेस में बिजनेस रिस्ट्रिक्शंस भी हम लोगों ने इंट्रोड्यूस किया है.
धन्यवाद सर. अब मैं नाउ आई आस्क सिद्धार्थ उपासनी फ्रॉम इन्फॉर्मिस्ट.
Thank you, sir. Afternoon, Governor. A fall in global crude oil prices was really helpful for bringing down inflation post 2014 when the framework was adopted. In the MPR, I think you have reduced your assumption for crude oil from 85 to 80 for the second half of the year. But has it become now, in these circumstances, in these new global dynamics, has it now become more difficult to rely on crude oil prices to bring down inflation domestically? And has it become a lower, smaller consideration in interest rate decisions? And just the second one regarding the MPC external members, you're part of the selection committee. Was there any conscious effort from the selection committee to look beyond experts in macroeconomics, inflation, interest rates, and monetary policy? Thank you.
No, I cannot comment, or I would not like to, mention about the deliberations of the Monetary Policy Committee. These are internal deliberations of the committee. It would not be appropriate, it will not be proper for me to to comment on the internal deliberations of the Monetary Policy Committee, and the recommendations of the committee go to the ACC for approval, so it won't be appropriate. So I will not comment on that. With regard to the first part of your question, I would request Deputy Governor Patra to take that.
Okay, thank you, Governor. So if you've noticed in this current period, the oil price went to 70 on a certain day, and now it has come down to 80. And you rightly observed that we have changed our assumption regarding crude oil in the MPR. But if you look at a more medium-term perspective, you'll see that the outlook for crude oil prices is actually softer than it is today. And the reasons are that, one, OPEC Plus is planning to restore production cuts in a phased manner through 2025. Then the International Energy Agency estimates that the demand for crude oil is actually softer than it is now. The third thing is that increasingly renewables are gaining a greater share in electricity generation and power and all that. So all these factors make out for a softer outlook on crude oil.
Thank you, sir. Mr. Mayur Shetty from Times of India, you have a question, please.
Governor, last year when you paused the rate hikes, you had made it very clear that that's a pause and not a pivot. This time you're leaving it open. You're saying that you're not commenting on whether it's a pivot. But at the same time, there is the stance has changed to neutral. So how do we see this? Is this a baby step towards easing, or is this completely independent from rate action?
No, you see, today we are in a position, I think I replied that I said that in reply to another question from Monojit. Now, the growth and inflation, in fact, I have said it in first part of my statement also, that the fact that growth inflation are well poised goes a long way to show that monetary policy framework, the FIT framework, flexible inflation targeting framework, is working and has proved its mettle. Now, in such circumstances, when both inflation and growth are well balanced, there was no point in continuing with, there was no justification to continue with withdrawal of accommodation. We have achieved what we wanted to achieve. Now, the future path is full of uncertainties, which I have listed out, and these uncertainties and the risks cannot be underestimated. And while we have, again I am repeating myself, that we have given the projections, while we have greater confidence that inflation is moderating, but considering the significant risks that lie ahead of us and which are staring at us, it will be inappropriate, it will not be appropriate to specifically sort of talk in terms of timing of a rate cut. We have to be very careful about opening the gate of the stable. Thank you.
Thank you, sir. Next, I'll ask Mr. Ankur Mishra from ET Now.
Thank you, sir. Sir, last few policies, there were warnings on banks too. This time you have given warning to NBFCs regarding the specific cases which you may have observed. I want to understand that with the actions which were taken by Reserve Bank of India and also the warnings which were given, has the desired result been achieved so that this time there is no mention of bank? And overall also, what is your assessment that yielded results have been found by the regulator, which was warned by you earlier? And also, sir, another thing, don't please consider as a question, what is the reason you have changed the animal from elephant to horse this time?
The reason for shifting from, it's not a shift. The reason for, earlier I used elephant, this time I'm using horse. The reason is that it's a war against inflation. And in a war, elephants and horses are used historically. Thank you. I think DG Swaminathan can take the main question.
Yeah. So, thank you, Governor.
No, Arjuna will come when there is a requirement. Arjuna, with his Brahmastra, or with Narayanastra, or the various astras that Arjuna has, will come back if and when necessary. But at the moment, we remain unambiguously focused. I have said that. But on a serious note, I think DG Swaminathan, please.
Yeah, thank you, Governor. See, as regards any regulatory or supervisory action is expected to have the intended impact. And as we have seen in the past as well, that the institutions do respond to the messaging that we do. So that way, whatever steps that we have taken, whether it is regulatory, prudential or proactive measures or supervisory actions that we had initiated, all of them had a good effect and also a demonstrative effect in terms of the rest of the industry also falling in line with the regulatory guidelines. So we have no doubt on that effort. But that doesn't mean that we can be complacent. So we continue to remain watchful, and we, through both our on-site examinations as well as off-site data analytics, we keep watching the behavior of various institutions through various segmental actions. We will take steps that are as may be necessary. And in each of the speech, a certain theme is given, focus is given for aspects that are considered relevant for that month. So at certain point, we were messaging to the banks, and today, because these are 2-3 items that were more relevant to NBFC, it was highlighted. But if you have observed it closely, the closing of that paragraph was covering all institutions, not just NBFCs. So the messaging is common. Thank you.
And also, just I would like to add, which is again there in the statement, We don't treat banks and NBFCs or any other financial institutions as adversaries. We work closely with them in a spirit of cooperation, and as I have said in my statement, we always expect self-correction, and we give enough time to whether it's a bank or an NBFC, to take necessary corrective measures at their end. We encourage them to do that. So it's not an adversarial relationship, but as a regulator and supervisor of the financial system of the country, it's our duty to point out where we see possible or potential risks becoming more serious and advise them to take corrective actions.
Thank you, sirs. Next, I'll request Mr. Sachin Kumar from Financial Express.
Sir, good afternoon. Recently, RBI came with this circular saying that there was irregularities in disbursement of gold loans. So I wanted to understand this: how big was this problem, and which segments of in the sector, for example, banks, fintechs, NBFCs, who were where did you find this things happening more? And if we go back little back, so we have seen that you have taken actions also with regard to KYC and ITs. So the second part is there are you seeing an increase in tendency to overlook norms?
I think Deputy Governor Swaminathan can take that.
Yeah, see the gold loan circular that you are referring to,
Just draw the mic closer. Yeah.
So the gold loan circular that you are referring to was issued on the basis of
little nearer, little closer, because the mic will not, TV will not pick up. Yeah.
See, the gold loan circular that you are referring to was issued after extensive on-site examination of various financial entities across the spectrum, and also on the basis of the data that we had collected through the off-site data monitoring systems that we have. On that basis, we had observed certain deficiencies in the conduct of gold loan portfolio. So I think the details are already available in the annexure to the circular. So there's nothing more that I can add to other than what has already been mentioned in the circular. And this has been a messaging to all the other participants to set right their policies, processes, and we have given certain time frame within which we expect them to set right these deficiencies, and we will examine it in due course to see to it whether there is a adherence to the guidelines as expected. The second part of your question, that whether there is a tendency to overlook regulations, but I don't think so. It's not something which is widespread. These are observations that are relating to a few institutions. So we engage with them bilaterally, and we will take supervisory action on those entities on a bilateral basis. But this messaging is for the rest of the industry is more has to be seen in a generic term, and not to be construed as overall non-compliance. These are certain outlier behaviors that get highlighted through these instructions.
Thank you, sirs. Next, I'll request Mr. Ben Jose to ask his question.
Good afternoon, sir. You have said that the growth rate is robust and there is no risk to growth. But the latest PMI numbers, both in service and manufacturing, it shows a steep deceleration from the services is at 9-month low and manufacturing is at 10-month low. Still in positive territory, but then are you taking this as just a one-off, or and the outlook of the industry is also negative of getting new orders? So is it a one-off, or why your growth outlook remains robust and retain the rate, but there are ground level indicators showing the other way?
You see, at any point of time, there will be push and pull factors. There will be factors which are where the activity, economic growth may be slowing down. There are areas where the economic growth will be faster. It's a mixed bag at all times. We have to get the overwhelming sense, the overall sense we have to get. And even the services PMI or the manufacturing PMI, they are still at highly elevated levels. And I think probably the PMI numbers of India globally are the highest among all countries. I think 56.5 in manufacturing and about 57 point something in services. They are the highest in the world. They're still quite elevated. They're still very much in the expansion zone. So therefore, there is, I think we should not, based on just one number, we should not overlook so many other positives in so many other aspects of the overall economic activity, the overall economy.
Thank you, sir. And sir, with your permission, last two questions. We already. Thank you, sir. So I'll request Ms. C. Prarthana from Akashvani to ask her question. Not come. Okay, Mr. Laltendu Mishra, if you like to ask question.
Good afternoon, Governor. What is the additional risk we are expecting from the geopolitical tension that is escalating in the Middle East? And what are the safeguards we are having? Thank you so much.
Thank you.
We have cited geopolitical risk as one factor that is in our balance of risks. But as Governor mentioned, our own growth and inflation dynamics are quite robust. And we have also been building up buffers against spillovers from the rest of the world. So we are, I think we are more confident about the evolving situation for India than we were a few months ago.
Thank you, sir. Finally, we'll have Mr. K. Ramkumar from Hindu Business Line.
Thank you, sir. Sir, you in your statement you had dwelt at length on this FIT framework actually. Okay, so just wanted to understand why did you spend so much time on that particular statement? Is there any kind of review you are considering for that band, also a tolerance band for inflation? Anything up this actually? Yeah.
You see, I started by saying that the MPC framework, FIT framework has completed 8 years. Two monetary policy committees in the sense that with different external members. Already that is over. Now we have a third set of external members of the MPC. MPC has completed 8 years, and today's meeting was the 51st meeting of the MPC. Retrospect and to see how the framework has worked. And I said that the framework has worked very well at during the periods of the multiple shocks that we witnessed, and even it has worked well during different interest rate cycles, and it has proved its strength. It has proved its mettle, and it should not be linked to any review or anything of that kind. It was just a moment to introspect, look back and assess how the system has worked, and the system has worked, I think, very well. And we have been able to respond to multiple challenges. I think I would say that we have responded reasonably well. I am qualifying my statement. It has worked reasonably well, and it gives a satisfaction to us.
Sir, one final question, please. Ms. Pallavi Nahata from NDTV Profit. Pallavi Nahata from NDTV Profit.
Yeah, please.
Yeah, sir. Thank you for the opportunity. So, you did talk about how it's a mixed bag in terms of high frequency indicators. There's a chance that the current deacceleration we're seeing in some of them could possibly be seasonal. But given that you've also highlighted some of the upside risks to inflation, are we then also looking at maybe one possible scenario where, higher interest rates could possibly impinge on growth going forward, given that we have fairly ambitious growth rates projected for Q3 and Q4?
At the moment, we don't see any evidence of of higher interest rates impinging on growth. Growth continues to be very robust. Investment intentions are quite visible. And at the moment, we don't have any evidence to say that it is impinging on growth. And these high rates have been there now for 2 years, more than 2 years. In fact, I think in 2022 February was the last hike when it was sorry, 23 February, I'm sorry, 22 we started the rate hike cycle. 23 February was the last hike, because from April it was a pause. So right from February last year, it's already 1.5 years. The growth is holding firm, holding steady. So it won't be correct at this point of time to say that key growth is impinging on the interest rates are impinging on growth. I think economic activity is well sustained.
Thank you so very much, sir. With this, we come to the close of this press conference. I thank the top management of the Reserve Bank for taking the questions. I would request the media friends to take the door at the back on that side and to come outside. Thank you, everybody, and have a pleasant day.
Thank you very much. Is it switched off?